Really, she's joining us from Bell Direct. Julia, nice to see you there, wearing a bit of red, but just finishing flat for the local market. Yeah, your thoughts on the session that was. What really stood out to you?
I guess a little bit disappointing, given that, as you mentioned, the US futures were so strong, up by 0.6%. And look, it really has to do with the big end of town. And I think increasingly, technically, it looks like we are coming up against important support levels. Commonwealth Bank, hit $70 today, didn't dip under, so found support at $70. But you've also got Telstra, which has come under pressure today on the back of its outages, and increasingly looking like it's set to test its all-time record low, which it's not too far away from at this point in time. And then the resource story coming under pressure there. So look, I think the big end of town is really struggling here to find not only earnings growth, but also some support in terms of investors willing to back them.
Yeah, interesting. Telstra obviously had that downgrade coming through last week. Selling continued, just can't catch a break. I mean, then you have a mobile outage on a day like today. So how much of this is just a continuation of the negative sentiment from last week? How much of the selling today? I mean, it's never good PR to have an outage, but...
Yeah, it's not the time. There's been a whole series of negative stories surrounding Telstra, and momentum plays on the downside are just as painful as momentum plays on the upside, and that's what we're getting with that stock at this stage.
And then Vocus, new CEO, ex-Telstra, but obviously there's a long way to go still for Vocus, but I mean, is this maybe a bit of an inflection point, Scott?
They say the best job to have is when you've got an easy act to follow. I think that's probably the new Vocus CEO's got a very easy act to follow. Nice to have. On the Telstra story, look, this is, I think, is still the capitulation trade. This is the sense that last week was the straw that broke the camel's back for a lot of investors, and we've seen continued selling 5 or 6 trading sessions now. People just saying, look, I'm out, I've had enough. I'm no longer prepared to cop it. I think that's the story. The outage day wouldn't have helped. Particularly, I had one of our colleagues say, look, it's the second or third time in reasonably quick succession. And so to some degree, if the news is already bad, if the story is always of a hapless Telstra, and you add these outages, it just goes to reinforce that message. And so for some, it may well have been just that last straw. For others, just incidental. But that story of still, as Tony said, when the tide's going out, the tide's going out. It's very, very hard to stop.
Yeah, and Julia, I mean, when it comes to some of the names, that we talk about so much lately, BHP, Rio Tinto, on the back of this rally that we've seen in commodities and oil in particular. I mean, we still did have Santos, Beach and Woodside up today with the price of oil sitting at $71.84 WTI in Asian trade. I mean, but when it comes to some of the selling that we're seeing in some of those bigger names, again, is it just, maybe some people hedging that things can't get much better from here on in?
I think it's all about earnings growth, and for Telstra, certainly the question has been around earnings growth, and even if you have a look at the big 4 banks, it's about where that earnings growth is going to come from. And when you have a look at these companies, they are cyclical. Businesses go in cycles, and usually the first step towards a profit fall is when you hear of things like cost cutting. And today we heard of Commonwealth Bank looking to cut costs, and this is all about usually maintaining profit and maintaining dividend, and then you run out of costs to cut, and then it's all about trying to rebuild that revenue base. But altogether, look, I think there's a lack of growth when it comes to the blue chips on our market. It's really the commodity side of the market which is holding up earnings growth for the Australian share market, and it's a stark contrast to over in the US, where we've just seen quarterly earnings growth of just over 25%. And although some of that is the Trump tax cut, that's probably about 7.5%. So underlying growth of, around about 18% is phenomenal in terms of the US. And then you look over here and, we're set to see about 7% growth for the financial year, but most of the heavy lifting coming from that material space. And that's just being reflected in the share price moves that we're seeing at the moment in the large caps.
Certainly so. Well, one small player today having a very bad day, and that is Wattle Health. So the ticker code there, WHA. So it's been suspended, or it was suspended. Shares coming back online after getting an update on its a funding package, essentially. I mean, Julia, what have we learned from Wattle today? And I suppose, what's the prospects for the company going forward?
Well, this is another company that is concentrating on that infant formula story, trying to cash in on the China, Southeast Asia story. The shares did fall 26% today, but that's after a capital raising and also 6 weeks of being suspended from the market, which is an amazing amount of time for a share not to trade. But first of all, the capital raising, it was a 1-for-5 offer at $1.25. So the dilution there means that the shares were always going to trend lower when they came on. But also in the 6 weeks since they've been suspended from the market, A2 Milk's been down 17%, Bellamy's has been down 20% in that time. So look, playing a little bit of catch up with its peers as well. And then finally, I guess, just having a look at the baby formula story and the infant formula story. A lot of the value comes from the marketing story and being able to get the product off to China and Southeast Asia and get that growth coming. Not a lot of the value comes from actually owning the cows, and I guess having a look at the move that they've used the funds from this capital raising as well as the debt facility from, and it's moving towards a vertically integrated model. Obviously, supply is an issue, especially when you're concentrating on organic milk formula, which Wattle is likely to do. And even in the case of Bellamy, is probably most of its infant formula, the milk powder comes from Europe. So look, buying a dairy milk company, I don't know if that's the best way to go. I mean, just ask Jerry Harvey and Harvey Norman shareholders there. But look, this is all about setting up a joint venture for the spray drying facility. So I guess moving closer towards that vertically integrated model, which, look, is difficult to do in a lot of those commodity based areas. You can even look at something like Australian Agricultural Code to see how.
So we'll keep our eyes on that one. But yeah, as I said, A2 Milk shares down by close to 2%, 1.8%. Wattle Health off by 24% as the curtains come down on this market, as I indicated earlier. Okay, so Julia, what do we need to know as we head into this U.S. session? It's a big week with FOMC minutes expected. Where will the attention really be? Will it be any sort of tweets, any further commentary around this U.S.-China trade truce?
Look, the noise this year is really coming from geopolitical risk as well as the trade talks. Really, I guess what the market is sort of concerned about is where the bond rates are going. So the FOMC minutes are going to be important. There's lots of talks about flattening in terms of the yield curve and what that means for the markets. But I guess, in fact, if we have a look at the markets, you know, we're seeing the 10-year bond rates over in the US just over 3%. In 2006, they were 5.2%. So I guess the higher interest rates are also a sign of a better economic environment as well. And in fact, from 2003 to 2008, we were in a rising interest rate environment. So look, I think the market's just a little bit jittery at the moment, but I think it's a positive thing if the US can withstand higher interest rates. And generally, if you have a look at the correlation of rising interest rate, it usually correlates with a rising share market. From 2003 to 2008, where interest rates were rising, the market was also rising. It was only when the global financial crisis hit that we saw that dramatic fall.
All right. And Julia, just as a PS, you are in